Good evening. Our team has decided to do the next event at Hyderabad on the 28th of October, around about 4:30 to 5 in the evening. It's a Saturday. Those desirous of meeting me in Hyderabad at the event may contact the email given below, moneypagehyderabad@gmail.com. We have also given WhatsApp numbers. You can contact us there. My team will be happy to help you with the details.
Hi everyone, welcome back to Be Rich. Happy, I think Thursday today. I recorded this a bit ahead because I had a couple of things happening and I couldn't pull in Anand in. But me and Anand do catch up on Paisa Bolte, so you can catch Anand there if you're keen on watching Anand and what he had to say. Because we spoke about the news and the news cycles and what headlines were hitting us over the last 2 days, which we have covered in Paisa Bolte, which if you guys are interested in, you can hop over there and see those videos. So what am I going to talk about? Today is a continuation of what I spoke about yesterday. Yesterday I spoke about how the Business Standard article was there, and it spoke about how the numbers of capital gains being filed in income tax and the numbers of volume, which sounds alarming. And for those of you who think I'm, blowing hot wind, as they say, or seem to be a very negative guy and always negative mindset, here's another article. This is from Mint. Yes, Balaji, I did not write this article. I did not do the research. It is another article which is of warning. And I thought it is a great article. And I'll share it with you guys again because I think this kind of information should be shared because collective learning is important. And not everybody can read everything. Some of us read some things. So it is nice to share so we can all kind of get a grasp on what's happening. That being said, I do love the comments. So do put your comments down. Those of you who do find other source of information which might be even contrary to what we're saying, please do share them. I would love to read contrary information so I get a more balanced approach, that I don't feel like I'm stuck in some kind of feedback loop and I only form a bias based on whatever I'm reading. I don't like being biased, especially having confirmation bias, as Shashwat says. It's not a good thing. So this article, what is it about? The title of the article is Small Investors Bear the Brunt of the Crash. So what the Mint article is saying, if a market crash comes, remember the caveat, if it comes. Me and Shashwat and Anand feel it's not a question of if anymore, it's a question of when, because the position things are at, it's just a question of when it's going to happen. This cannot continue because simply the interest rates where they are will not allow this to continue. But anyway, it's saying, the article does take the caveat saying investors may bear the brunt of the crash. So the article's main point is retail investors who joined the market recently in the last 2 months through September could be severely impacted if the market indices decline further. There's a potential downturn, he says, because of the influence of the rising bond yields in the US and the Israeli-Hamas conflict in West Asia expanding, and it doesn't look like it's good. He's saying a sudden huge market correction may come, and if that kind of a market correction comes, let's say AFI suddenly pull out the rug, there will be a huge correction in the Indian indexes, and there could be extremely bad news for a lot of small investors, retail investors. So you might be thinking, I don't know. What are you saying, Vinod? I don't know this. So I thought I'll talk about some of the famous stories in market histories before I talk about what more this article is. There's a guy called Nick Leeson, who was a derivatives trader in Barings Bank, one of the oldest and most prestigious investment banks in the UK. And in the early 1990s, Leeson made unauthorized speculative trades that resulted in huge losses. When the extent of the losses came to light in 1995, it totaled to amount over almost $1 billion, which was more than the bank's available trading capital. As a result, the bank collapsed and Leeson was arrested and served a prison sentence. So, gambling, does it pay? I don't know. Let's move on to the next story. John Merriweather and the Long-Term Capital Management, LTCM. John Merriweather was a former Salomon Brothers bond trader who founded LTCM as a hedge fund in 1994. Initially, the fund had enormous success and was having annual returns of over 40%. However, in 1998, following the Russian financial crisis, he faced significant losses due to the highly leveraged positions and the massive bailout organized by the Federal Reserve to prevent broader market financial meltdown. The key thing being the Fed stepped in to prevent broader market financial meltdown, and all the positions he was sitting in suffered huge losses. Sounds familiar, doesn't it? The Fed having a role to play. Let's move on to the third example. Bill Ackman and Valiant Pharmaceuticals. Bill Ackman, the founder of Perishing Square Capital Management, is also known for his high-profile bets in the stock market, and he's been in the news quite often recently. Anand has also spoken about what he said. He made one significant investment was in Valiant Pharmaceuticals. Initially, the stock did very well, but soon it faced challenges due to scrutiny over its business practices and drug pricing, and his fund finally lost over $4 billion in investment before eventually he sold his stake. Sounds familiar, doesn't it? Everything is a good company, let's keep buying as a retail investor. It's only going to go up. Suddenly some catastrophe happens with the business, and there you're left holding the short end of the straw. Fourth example, Anand's favorite, Moshe Son, the dot-com bubble. The founder of SoftBank, he was one of the richest men in the world during the height of the dot-com bubble. However, when the bubble burst in the early 2000s, SoftBank's shares plummeted, and Moshe Son approximately lost over $70 billion worth of his wealth. Fortunately for him, he managed to rebuild his fortunes over the years, and things are different. So you can see Moshe Son, huge lot of money, lost everything, managed to rebuild it, then again had huge losses. What is going to happen now with Moshe Son? I don't know. So what does the article talk about? So these are all cautionary tales which I want to tell you guys about. The reason is, what the article mainly says is, the National Stock Exchange reveals that these investors have made net purchases in 2 consecutive months in September, totaling over 21,900 crores. Just digest that amount of money. 21,900 crores by new investors who have come into the market in the last 2 months of September and before. The net flow of sales is from April to July. Experts have cautioned that investors who jumped in the market at the peak, motivated by fear of missing out, to hope to making quick profits, might suffer significant losses if the market experiences a pronounced downturn. So, you've got a lot of investors who have entered the market in the tune of 21,900 crores because they have been having FOMO. Sounds familiar. Buying everything under the sun, right, left, and center, because they're scared of missing out on huge profits. They want to make a quick buck. Sounds familiar through all the stories we heard. And the experts are saying this is not the time to do this. Because of macroeconomic indicators and global indicators, geopolitical indicators, we are due for a huge correction due to the situation the globe is facing. Forget what you're hearing about earnings, market, and what is happening in the business cycle. They're saying just on the sheer size of the hammer which is going to fall, in terms of what's happening with Israel and Hamas, and what is happening in terms of the interest rates and Fed, they're expecting a correction to come, and a lot of people are going to be holding the short straw. Further, they had someone called Vijay Chandok of ICICI Securities emphasizing occasional market corrections are typical in a structured bull market. But he mentioned the US slowdown is a concern, and the Palestine conflict is a big concern. He says, unlike the Russia-Ukraine situation, which had a smaller global impact, he says this is going to have a much wider, larger impact, what is happening, and the potential challenges faced by new retail investors in context of the global events and dynamics could be bad. So, are you a retail investor? Have you entered the market in the last 2 months, watching a lot of YouTube videos, watching a lot of Instagram reels, and who's been thinking, I can do these trades. I know it's just a Tata company. It is just this, it is that. Adani's will recover. I can see what is happening. Sure, some of you might succeed. But as the SEBI data showed in my last video, 90% of the investors in the Indian market are currently making losses. 90%. I would say that is a huge odd which I don't see in my favor if I'm a new retail investor entering the market. I would be very cautious. If you say 9 out of 10 people going on road today are going to die, would you go take your car out or your bike out? I think you would think twice if I tell you 9 out of 10 people are going to die on the road today. Those are the kind of numbers which are there, and that's the kind of situation we are in. So if you're a nascent investor, if you're a new investor, I would tread very cautiously, and I'd be very careful on the exposure which I take in the market. Like Anand says, if you have the stomach to endure the losses, then please go ahead and try. In the long term, yes, things recover, things change. If you have the capacity to hold on to the long term. As famous quote goes, markets can remain irrational longer than I can remain solvent. So if I can't have money to hold on to my positions and my bets, then the market might take longer than I'm expected to recover. So be careful out there. That's all my essence of this video is. I do encourage all of you to be in the market, participate, and make money. Yes, I'm not an naysayer. I don't want you to be suffering FOMO, but do this with caution and a lot of research, and take a lot of financial guidance from your advisors. Please do talk to your SEBI registered investor financial consultants, and talk to your friends and family who are also in the market to find out what they're doing, and take advice from both sides of the aisle before you decide to plunge into it. I hope you found this video informative and entertaining as always, and I'll see you in the next one soon. Thanks.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.